We're gonna go ahead and get started. Let me share my screen this week. Welcome, first of all, thank you for tuning in to Tim's Tidbits. This is our financial journey. We're gonna get to this financial freedom, man. This week, well, first week, we started out with how to get started. We built we set up our brokerage account. Second week, we talked about fundamental analysis and fundamental analysis. I break it down in the simplest terms I can. It's just seeing how healthy the company is, how much money they got, how much money they make, how much cash they got on hand, how much debt they got, what their leadership like, to determine if I want to invest in them, if they're a strong company and I want to invest in them. And everybody know I choose to do options instead of buying the shares. I buy shares for my kids, and so they can hold that for 20, 30 years. I buy options for myself to make money to invest for my kids and make money to buy me and my wife things that we going to be wanting in the near future. So thanks again to everybody coming in. And this week, we're going to be talking about technical analysis. So let me go ahead and share my screen and get right at it. Get right at it. And my sweetie not here, so I got to pull it up so I can see if I'm sharing the right thing. Where we at here? Technical analysis. Boom. Share. Boom. There you go. Am I? No, I'm not sharing the right screen. I need to share the right screen. PowerPoint, PowerPoint, PowerPoint. Oh, did I start it? Oh, yeah. Did I not start my PowerPoint? Exit full screen. Oh, yeah, I did. Yeah, there you go. All right. Nah, let me get to the right. There you go. Now we're cooking with Crisco. Now we're cooking with Crisco. What y'all see? Let me check to see what y'all see, cause my sweet ain't here. Hold on. She can't yell and say, nah, we ain't on the right screen. Boom. Now we should be good. Pumpkin, unmute. Tell me, you see a slide that say Tim's Tidbit with a dude on there and me in the corner?
Yeah. Yep.
All right. We getting ready to get it. We getting started now. We cooking with Crisco now. So Tim's Tidbits, y'all know what it is. Y'all know what we here for. You know what we gonna talk about. We talk about our investment journey, our investing journey. What we talking about today, Tim? Before I tell you what we talking about today, I'm gonna get my disclaimer out the way. Everybody know my disclaimer. Everybody who follow me and share this with me and do this with me, they know that I'm not a financial advisor. They know I'm not a fiduciary. They already know that nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. Now, all that out the way, that don't mean what I'm saying ain't worth nothing. It's worth a lot. It's changing my life. It's changing other people's lives. And I learned 80% of what I know for free. So I'm sharing it with everybody for free. I ain't gonna say I'm teaching. I'm just sharing everything I've learned for free. And so what are we talking about today? We are talking about technical analysis. Well, Tim, what is technical analysis? Well, I'm glad you asked me that. I like to break it down real simple. To the simplest forms, technical analysis ain't nothing but looking at past price movement and volume. Looking at what the price action was in the past. Did it go up? Did it go down? And the volume, how much of that asset was being bought and sold at that time. That's in the simplest terms. That's the way Tim Rogers like to look at it. I tell my sons, green mean up, red mean down. It's just that simple. Don't let people overcomplicate it for you. They like to get into all these moving averages and RSI and all of that. All that stuff is helpful, but you can turn it into what they call them indicators, moving averages, RSI, Bollinger Bands. You can have a indicator orgy and you be going crazy and just making yourself go crazy. So you don't want to get bogged down in all the technicals. Just know green mean up, red mean down. You want to buy when it's down and you want to sell when it's up. Keep it simple. In the military, they say KISS. Keep it simple, stupid. So why do you want to use technical analysis? Technical analysis, it gives you opportunity to determine price trend. Tim, what's price trend? Which direction it's going? It's trending up, it's trending down. We're gonna get into a little bit of that. Up and to the right, that's trending up. Down and to the right, that's trending down. Price trends, you can visually identify investment opportunities, meaning you can see the dips, you can see when it go down, you see, because if you just look at a price, you don't know if that's a high price or a low price, but when you look at the charts, you can see it's going down. You can visually see the dips. So, and then it also lets you determine if the asset is overbought or oversold. We're gonna get into that a little bit later, meaning am I paying too much for it, or is this on sale? That's what overbought and oversold is. And it also lets you determine your entry and exit points. That's why I talk about you can see the dips. Okay, I want to enter here, I want to exit there. That's what the technical analysis help you do. Right? They help you visually see all of that stuff. Now, break that down. I'm breaking down price trends. I already kind of told you what this was. It's different types of price trends. You got uptrends, downtrends, consolidated. You got pullbacks. You got all kind of stuff. But for the most part, you want to look at like the uptrends, the downtrends, the pullbacks, the consolidation, and what's an uptrend? An uptrend is when the asset is making higher highs and higher lows, meaning it's going up and to the right. It's coming up here, it's coming down, it go a little bit higher, it come down, but it don't come as low. Go a little bit higher, don't go as low. So you're making higher highs and lower lows. So you're going up and to the right. A downtrend is when it's making lower lows and lower highs, meaning you're coming down, you come back up, you go down lower, you come back up, you go down low, you're in a downtrend, right? Overbought is, like I said, you're paying too much for it, or you paying, it's on sale. It's either selling for higher or lower than its fair price. And the fair price is what everybody determine, okay, that's a fair price, I'll pay that for it. That's what it's selling at right now. Well, not really, not right now, but they saying that's what's a fair price for this asset. And most time that's what it's selling for right now, right? And then you determine those. That a lot of people determine if it's overbought or oversold by looking at the RSI, like I was saying, the relative strength index. That's an indicator called RSI, and it shows you when it get up to like 70, quote unquote 70 is like the area where everybody think, okay, it's getting oversold, and so it need to sell off. And then when it get down to 30, it's overbought. I mean, it's oversold at 30 and overbought at 70. So when it get down to 30, they think it's gonna go up. When it get up to 70, they think it's gonna go down. Those are RSI indicators. That's more important to like short-term traders. And I personally use the RSI when I'm trying to determine when I want to get in, like when I want to make my entry, because I want to get in when it's getting ready to go back up. I don't want to get in when it's getting ready to pull down a little bit, right? And then the entry and exit point, that's the price where you buy it, entry, and the price where you sell it, exit. That's the entry and exit point. And a few more common terms. Those were some common terms. So a few more common terms is my favorite chart to look at is a candlestick chart. And I'm gonna show y'all what that look like in a minute. But I like to use a candlestick chart because it's just visually easier for me to look at, like candlestick charts, bar charts, and candlestick charts and bar charts. They show you the same information. They show you like the high of the period, the low of the period, the open of the period, the close of the period, just by looking at the candle or the bar. And like you got the line charts, they just show you like the up and down movement. They don't give you all the information visually by looking at it, but you can find it out. Support and resistance are some ones, and I ain't gonna read through like what everyone mean, because I'm gonna do like I did last time and send everybody the slides that's on here. I'm gonna text them to you, and if you're not on here live, it'll be a link in the YouTube description where you can download these slides. But the support and resistance, that's gonna be one you hear all the time. That's important. That's the most important one to me. Moving averages, those are important. The 20, 50, 200, them the ones I look at. Volume, that's the amount that's being bought and sold. Like I said before, pullbacks, that's when it's pulling back a little bit. You have pullbacks in the market when it pulled back anywhere from 5 to less than 10%. A correction is a stronger pullback when it's anywhere from 10 to say 15% under 20. And when you start getting up around 20 and over 20, that's when you getting into like like crash territory. You know, you're looking at like crash territory, like with COVID, it fell down to like 30-something%, I believe. That's when you get it. So you got pullbacks, corrections, and crashes. And you always want to buy when it's a pullback. You definitely want to buy when it's a correction, and you definitely want to buy when it's a crash, because that's when you're going to make the most money, because 100% of the time, the market always recover from any pullback, from any crash. And COVID just happened to be a rapid recovery. It ain't COVID. 2020 was unlike any other year. It went down 30-something%, and 6 months later, it was back at new highs. That's unheard of. It usually take, you know, a couple years to get back from that low, but 2020 was different. Then you got gaps and all of that, but you can read exactly what it means on the slides when you download them. We're gonna keep moving along. We 12 minutes in. This is a candle. This is what candles look like on the chart, right? And then, so let me see if I can switch over to the other screen where I can draw on the screen a little bit. Let's see, share that. Yeah, y'all still see the candles, right? Give me a thumb. Somebody give me a thumbs up if you can see the candle. Put your thumb up on the screen. You can see the candles. Yeah, can y'all still? Yeah, you still see the candle. Okay, so on the candles, right? You have, it show you the open, the close, the high of the period, the low of the period. And the reason why I say the high of the period and low of the period is because it's it can be a day, it can be a week. You can change the intervals of the candles. And so if you got it on a daily candle, this one candle is for one day. If you got it on a monthly candle, this one candle is for 1 month. This for all the price movement during that period. So on a green candle, the open is at the bottom of the body of the candle, and the close is at the top, meaning the price opened at this period right here, right? And then it closed at that period right there. Sometime during that period, it sold as high as right here. And at some time in that period, get out the way, screen. This thing in my way, I can't undo that. It's at the bottom. This thing in my way, so I can't write down there. I can't write down there, so it's in my way. Can I get it? It's in my way. I can't write at the bottom of that one there. So, and then the difference between the red and the green candles, everything is the same except for the price went down. So on the red candles, right, it opened at the top of the body and it closed at the bottom of the body because the price went down during that time. The high is still the high and the low is still the low. So if you got a daily candle during that day, during let me erase this real quick. If you got a daily candle, right, just say these daily candles. So today was a red day. The day went red, right? So during today, it opened up at $3, right? And then at some point during the day, it got all the way up to $5. At some point during the day, it got all the way down to $1. And then it closed at $2.50. So that's a red day because it opened at $3. At some point, it went all the way up to $5. Some point, it dropped all the way down to $1. And then when it closed at $2.50. So that make a red candle. You know what I'm saying? And on the other side, it opened at $3 over here, right? At some point, it went up to $6. At some point, it came down to $2, right? And then it closed at $4.25. So that made the day green because it closed higher. And if this was a month, it'll be during that, at the beginning of the month, it opened here. At the end of the month, it closed. At the beginning, opened there, closed there. If this was a week, it opened here, it closed there. It's just the candle gonna always show you for that time period. They look the exact same, but it's just based off the time period that you looking at, the interval you got it set for. All right. Switch back over there. And that's why I like the candles, because I can visually see them, and I'll show you the difference when we go over to the other, what's the name, when we go to these free tools right here that I'm talking about. So let's move over here, go online, and barchart.com. That was one from last week that I said I like to use that for my technical stuff. Stockcharts.com and cnbc.com. I use that on my phone more than my computer, to be honest. But let me go to screen number 2. Screen 2. I really wish I had my Zoom up so I can make sure y'all see the barchart.com with the man and the dog holding up the little vaccine thing. Y'all see that?
Yes. Yep.
Okay. All right. So barchart.com. This is where I come. Oh, yeah, 16 minutes. Okay. This is where I come when I want to look up like price performance on my asset I'm looking at. I come here to look up the option prices. I come up here to look up what they did when I'm getting ready to figure out my strike price that I'm gonna do, the strike price formula that I learned from the come up series. We're gonna talk more about that on the next session about how to find strike price. But barchart.com, this is a free one to really look at the stuff. To really look at the stuff I like to look at, it make you sign up for a free account. Like you just come on here and look at certain things without signing up for a free account. But like I'm just gonna look up XLK. Like you put in a ticker up there in the little search thing up there and press it and it'll pull up XLK. And over here on the see this right here, while I got it there, let me see if I can blow this up. It might be easy to do on those are candles, those little funny looking blue things around it. That's like the Bollinger Bands. That's what I was telling you about. But let me see if I can show you like the difference. It's easy on, I think CNBC might be easier to show you the difference in the what's name. This CNBC and like this right here, they call this a mountain chart. I don't know why. Mountain chart look just like a line chart to me, except it's just got color. Like if I change this to line, see the color just disappear. See the line, it's just a line on there. And then I already showed y'all candles and then bars. It's kind of hard to see, but the bars, them little ticks sticking out to the left and the right, that's the high and the low of the day. Why did that disappear? That's the high and the low of the period. Them little ticks that's sticking out to the side of those bars there. It's going up and down. It's like it's the high and the low of the period that's sticking to the left and the right. But I like candles because they got colors and that's just what I'm used to. But barchart.com, that's a good one. Stockchart.com. The only thing I use this for is looking at historical price performance. And the way you do it is you come to stockcharts.com, and then up here in the little bar, see what my little mouse moving around up here where it say enter symbol. On the side it says sharp chart. If you drop that down, you'll see something called seasonality. It got like a little snowflake next to it. When you click on that and then you put in your ticker symbol XLK, when you type it there, boom, it gives you this little chart. And what this chart shows you is, if you read up here, it's a percentage of months in which XLK, that's the one I'm looking at, closed higher than it opened from February 2017 to 2021. So over the past 1, 2, 3, 4, 5 years, it's giving you the average of January, it closed higher than it opened 80% of the time. February, it closed 60% of the time, 50% in March. You know what I'm saying? It's when it started that month, it closed out higher 50% of the time. And January, February, March, April, 100% of the time in the past 5 years, XLK closed higher than it opened that month during that period. And this is what I use. And this, I use this for like to let me know when I want to be looking at buying something. Like I ain't gonna be wanting looking at putting on a position in XLK in April, because 100% of the time it's going up in April. I want to be looking at the months when it's pulling back, because I put on long-term options. Like I want to be looking at March, June, like August, September, looking around that time when I know it's a 50-50 chance that it's gonna be pulling back during that month. 100%, 80% is gonna be going up. I ain't gonna be looking to be trying to buy nothing during that time personally. That's what I use that for. And let me switch back over here. I think that's all I had to say. And let me plug my, y'all know I got to plug my folk. Y'all know I got to plug my folk. Y'all already know who it is. If you've been rocking with me on the last few weeks, you already know who it is. The Come Up series, they got the YouTube page. 80% of the stuff that I learned is from the Come Up series when it comes to like options. Live every Tuesday and Thursday. Ian Dunlap, the Master Investor on Instagram. He do Market Mondays on the EYL YouTube channel, Earn Your Leisure YouTube channel on Monday nights. He do Market Monday at 8 o'clock. They live. It's a lot of other people out there that do stuff, but this is the best free resources that I know of, and I've learned a lot from them. So with that said, we're going to end off the technical analysis portion of it, and I'll open it up for anybody who got questions. Hit the little raise hand thing there if you got any questions, and I'll see if I can answer your question. Anybody? Ain't nobody got their hand up? Ain't nobody got no question? Somebody got to have a question.
I got many questions, but you know, I'll call you when I need you.
Yeah, actually, somebody else might have that same question. Ask your question. We got about 10 more minutes. Ask one.
It's a lot. I'm just trying to understand all of this. That's it.
Okay, Sydney, unmute. Ask your question, Sydney.
Yeah, for the come up series, as far as the live sessions, do they post those, or you just gotta catch the live session?
They on their page, like they stay on their page. All their videos that's on their page now was a live session at one point in time. And if you go to their page right now and look on their playlist, they got a playlist called the Starter Pack. And the Starter Pack is just all the old live sessions, and they put it in a certain, not all of them, but it's key live sessions that they put in a certain order to help new cousins from the beginning to the end. It's like it started, and they not recorded from the beginning to the end. It's just, let me look here because I'm looking over there. It's not recorded from the beginning to the end. It's in the order that helps you understand it. And it's not chronological, but it's in the right order from beginning to the end. And it's called the Starter Pack. Matter of fact, I'll text you a link to the playlist when we get off of here.
Okay.
All right. Anybody else got a question? No question, no questions. Again, man, I'd like to thank everybody for getting on here. I got my mom on there all the time. Eva, see Eva on there. She always in there. Whopper always in there. Oh, we got Mrs. Brooks in here today. Sydney always here. Geach always here. Mackie here. Got my brother in here today. He finally made it. You know what I'm saying? But yeah, Auntie always here. You know, glad she ain't combing no hair today. But yeah, man, if it ain't got no question, I'm gonna go ahead and end it. We've been on here 24 minutes. Going once, going twice, going 3 times. No more questions. No more questions. All right. Anybody just want to say something?
As always, nephew, great job, great job. You did a great job.
Thank you, thank you. Anybody else want to say something?
Right. To listen.
Love you, Junebug.
Thank you, thank you. Hey there, Eve, how you doing? Okay.
We gonna be where the money resides.
Yeah, where the money resides. That's what we're trying to get to. And then, oh yeah, before I go, everybody that's in here, we're gonna start up here. I'm starting with Mama. I don't know how this in for y'all, but I'm starting with Mama. Next week, I'm gonna be in Atlanta. And next week I plan on talking about putting everything together, like the technical analysis, fundamental analysis, and how to go about, like, you know, choosing your positions and all of that. And then the week after that, I was planning on going in and actually how to buy it in my platform. Would you rather me just wait and to the following week to do a live class, or just record the video on putting it all together and put it on YouTube for next week?
Yeah, put it together and put it on YouTube.
Yeah.
Oh, YouTube. You Eva say YouTube, Mama. Just put it on YouTube.
I like it live.
You like it live, Auntie? So we got two. Okay, two to one YouTube.
I like it live, but Junebug, you be flying through it. We be like, okay,
it's be recorded. That's why you get a chance to ask questions. Just either YouTube.
We like it live, man. We like it live.
Okay, we got
live.
We got 3 live, 2 YouTube, 4 live, 4 live, 4 live, 2 YouTube. Oh,
but you're not gonna skip that week, are you?
Huh?
4 live.
Okay, everybody like it live. Live outweighed. Live. Whopper said, "What up, Lord?" Live outweighed. He in the car ride. He just said it. Live done outweighed the YouTube. So next week we're not gonna do one next week. So the week after that, which gonna be the what's that date? The 7th. The 7th of March will be the next one that we do, and it's gonna be on putting it all together. It's gonna be on putting it all together on the 7th of March. We're gonna do it live, putting it all together. And then what I do, it's gonna be on the 7th of March. So for everybody that's on here now, I'm gonna text you the slides like I did last time. I'm gonna text you the slides. I'm gonna text you the YouTube link so you can go back and rewatch it if you have to and go along with the slides. And feel free to share it with other people, share the live link with other people, share the YouTube link with other people. Cause like I say, I'm just sharing this for free. Cause 80% of stuff that I learned was for free. So I'm just giving it to everybody I know. Yeah, y'all can ask anybody I know. My homeboy Whopper, he know. I stay out there. I was on hold for 2 hours trying to get some stuff straight with him the other day. You know what I'm saying? I'm just sharing this with everybody that I know, man. So feel free to share it with your friends and family. And we're gonna get to this financial freedom, man. If nothing else, I see y'all on March the 7th for the next edition of Tim's Tidbits. And to then, y'all know what it is, man. I'm gone.